So today we're going to hop in and give you a quick rundown, pros and cons of different kind of lenders. If you're buying a home here in San Diego, whether you're a first-time home buyer or you have to sell your current home, buy another house, even though if you've done it before, there's different options as far as the lending goes. So I have Amir on today, and he is one of the three that we're going to talk about, where we're going to get into kind of the three top, lenders or, people where you're getting your mortgage from. So as you're going through the process, there's going to be some pros and cons for each one, and we'll dive into each specific one and let you know all the information we can, so that as you guys are looking for homes and kind of starting that process, you're going to be nice and informed. So let's jump into it. Amir, if you want to break down, we're going to start with kind of the traditional bank. So as people are looking, they have their Chase, their Wells Fargo, their, all the local banks here. What is the pros and cons of that? Obviously, when you're thinking about getting a mortgage, a lot of people are like, oh, I'll just go to my bank. They're right there. I see it all the time. But yeah, let's just start with them.
Yeah. And so, before we're going to go into that, I've worked on all three sides. I've worked with banking. I've worked with retail, which we'll talk about. I'm now on the wholesale side as a mortgage broker. There's a reason for that, right? When it comes to banking, one of probably the most advantageous reasons why a customer might think that they want to go to their bank is just to keep everything in-house, right? They have their checking account there, they have their savings account there, maybe they have their investment account there, and there might be some value to maybe just having their mortgage there as well, so everything lives underneath one roof. That would be really the only reason why you would think to yourself, like, I want to keep everything with my bank, right? The downside of that is, if you go to a restaurant that just makes hamburgers, and they're going to be pretty good at making hamburgers. Okay. But if they make hamburgers and they make pizzas and they make hot dogs and they make, 15 other things, they're not going to be great at all of those 15 things. They just happen to have them all on their menu. Right. And so when it comes to your mortgage, one of the questions you should be asking yourself is, do I want to work with an institution that just solely focuses on what it is I'm looking for at this point in time, right? The reason why I bring this up is because licensing plays a big role. When you're looking at retail, when you're looking at mortgage brokers, retail loan officers, mortgage brokers are licensed, right? What a lot of customers don't understand is that inside of banks, where a bank where you can have a checking account, a savings account, where they have an ATM, those mortgage professionals are not licensed, right? And the reason why is because the regulatory framework doesn't require them to be. They just basically have to have what's called a mortgage registration number. In other words, you could have somebody working at a bank that was working as a teller on day one, and now they're a mortgage loan officer on day two. There's no real way for you to make a determination on how experienced they're going to be, how much product knowledge they're going to have, how well they know the mortgage ecosystem. The second part of that kind of plays into what I was talking about an organization specializing in the product. Banks are going to take longer to process mortgage loans, right? So they're going to take anywhere from 30 to 45 days to get a mortgage through the system. Why is that relevant? Why does it matter if it takes 30 or 45 days? Well, Chris, you know as well as I do, inventory is tight. It's a competitive environment. And so you want to bring as many great things to the table as you can. Of course, price is probably king in most cases. But then there's these ancillary elements that can really play a role. Let's say if a seller wants to sell their home in the next 2 or 3 weeks because they want to relocate, having to go with an offer where it's going to take them 30 to 45 days to close might not be as appealing as somebody's going to take 2 weeks.
It's always good to go through your options and kind of figure out which option is going to be best for you. But the secondary option that a lot of people see is, because you see a lot of commercials, you see, anywhere you're watching, you see the retail lenders. So kind of the big guys, Rocket Mortgage, Loan Depot, all those kind of things. So let's hop into that a little bit, because they kind of sell ease. They kind of sell click a button. Here we go. This is like, let's make this as easy as possible. But what's kind of behind the scenes pros and cons of going through one of those, one of the like kind of retail lenders?
Yep. So let's start by, before we go into that, Chris, how many years have we been working together?
Quite a few.
Okay. And tell me about the process with me as a mortgage broker. Has it been pretty seamless?
Pretty seamless, yes. From front to back, communications there. Clients that we send your way, are working with you?
The reason why I lay that up as an answer before I jump into retail is retail often touts better service, smoother process. Um, they're fallacies, like these things don't just exist inside of those ecosystems. In fact, the process in actuality is easier, faster, cheaper with a mortgage broker. Now, what's the upside of working with retail at risk of talking my book? Really, there is none, right? And I've worked on all aspects. So they did an analysis last year, comparing pricing between retail and a mortgage broker. Okay. And the cost savings between interest rate and or fees, because retail lenders will charge you a bunch of fees that you don't need to pay, was the difference of about $12,000 on average per consumer. Right. So it's a more expensive product. Now you had mentioned something. You mentioned the commercials that you see, right? Chris, who do you think pays for those commercials?
Yeah, the consumer ends up paying for those.
They pay for those commercials. They pay for the huge office spaces. They pay for that technology, right? And the part that is kind of hidden that they don't realize is they also pay for all of the layers of management, right? So when a loan comes in through the front door, there's a certain amount of revenue on that loan. It's got to pay for all of those things and then be profitable. In order for that to occur, these retail lenders, they're going to charge points and fees up front, and they're going to charge higher interest rates as well. Why is that? It's so that they can boost the revenue on every single loan that comes in so that their CEO can continue to make $5 or $10 million a year, right? The customer is actually paying for those things, right? If you want to rewind back to like 15 years ago, retail lenders actually did have an advantage, right? And the reason why they had an advantage is because they really did have a technological advantage over mortgage brokers. Mortgage brokers were isolated. Technology wasn't what it is today. The wholesale partners that we would work with, in some cases, you'd still be faxing documents into them. It was a completely different process. Fast forward to 2024, a lot of the software and technology architecture that is involved in these retail operations is actually available to mortgage brokers at a really affordable rate. And a lot of mortgage brokers actually use that kind of technology to help deliver to their customers a better experience than what they're going to get on the retail side.
So we went with the banks. We went with the kind of the retail people. Now, what's the third option that people have? This is this is in your ballpark. You worked in all three. Now you're currently in this role. So what is the benefits, pros, and cons of what you're doing as a mortgage broker?
It is, as a mortgage broker, when you work with the broker, it's nothing but wins. And the reason why I'm going to explain that to you and how I explain that is it doesn't just have to do with pricing. It also has to do with service, and it also has to do with experience, right? A lot of the mortgage brokers you're going to interact with have a ton of experience. And that's why they can be independent mortgage brokers, is because they don't need the backbone that these retail lenders claim to offer their employees, right? On wholesale, there are no junk fees. There is no application fee. There is no underwriting or processing fee. There aren't these admin fees that can be, several $1,000s. And then on top of that, because of how mortgage brokers deliver mortgages, the rates end up being more competitive as well, or end up being lower. It becomes the more affordable option, right? Also, when you work with a mortgage broker, you're not stuck into like a pipeline of 800 numbers where you're dialing, trying to get a hold of the right person, almost doing your own mortgage, right? You deal specifically with that mortgage broker, same way you would deal with your real estate agent. When your clients are dealing with you, they're not calling an 800 number trying to figure out how to get in touch with you, right? They know exactly how to get in touch with Chris. Chris is available, probably 24/7, right? Because that's kind of our industry, right? When banks and retail lenders oftentimes are stuck within those conventional hours, and let's just say you're somebody that works 9 to 5. Well, you don't have time to talk about this thing at 2:00 on a Wednesday. You need to be doing that maybe after you get off of work or the weekends. Mortgage brokers, like real estate agents, we work for ourselves and we understand those client needs. And so the availability portion is there as well.
And I got to say, we've been through a lot of transactions with you, and it's all, most of the time it's working out of those 9 to 5 boxes. And so it's nights and weekends. And it's like, hey, we're going to see this house with our clients. They decide they want to write an offer. Amir, can we get a pre-approval letter? Because you already got all that lined up. The communication is, I think, one of the biggest differences from the real estate agent side, as far as working with because we work with all these different platforms as well. And just working with, I think you mentioned it, the biggest thing is Hey, I'm going to call Amir. Okay. I got Amir. I could text him, whatever. It's just like that direct line is super key in the whole process. I mean, it makes it go seamless. It makes it easier. It's even when we're writing offers, having you specifically reach out to the other, at the other listing side and saying, "Hey, we're dialed in. Here's what's going on with our clients," and they could call you directly as opposed to like, who do we reach out to kind of thing.
Yeah, 100%. And I think, before we actually started doing this recording, one of the things you asked me about was, hey, do you think there's an advantage of somebody being local? Right.
Hmm.
Here's a key advantage of being local. Oftentimes when you're like, hey, we're making an offer, here's the listing agent's contact information. They're already in my system, maybe. Right. Might have already dealt with them. There's been a couple of transactions that you guys have gotten under escrow where I had dealt with the listing agent before. So when they're going to accept that offer and I'm talking about the financing and they've got experience closing a transaction with me personally, it almost gives you another green check box, right? We're like, oh, well, this is Amir doing the financing. So we know that there aren't any holes there. Because we all hear about the mortgage nightmares of loans falling through and not getting qualified. Unfortunately, 99% of the time, that's a product of loan officer inexperience or negligence in understanding what to ask, what to look for, and getting those answers before somebody gets in the car with Chris to go look at a home.
Yeah. And so one of the first steps as you guys are watching out there, well, first off, if there's anything we didn't cover, drop us a comment below and ask the questions below. If I don't know it, I'll forward it to Amir. We'll get those answered for you. But the first step as you're looking for a home is get that financing in order and get that dialed in, because that's going to give you a big piece as far as actual homes you're looking at. You're not wasting your time looking at stuff that's, out of your budget, and just kind of get you dialed in on that very first step. It's super key. So if you guys are thinking about making a move, whether it's 1 month from now or 1 year from now, all of our contact info is right below. Feel free to reach out, even just to start the conversation. If you don't want to get serious right now, you just want to pick our brains, feel free to reach out. We got your back when making the move here in San Diego.